Your wealth deserves stability, expertise, security. Your wealth deserves LGT Crestone, private wealth with over a century of global heritage.
Hello and welcome to the Global View on this Thursday. Well, let's get straight into it. And the US economy has shifted into disinflationary mode. Consumer prices rising 0.2% in June for an annual gain of 3%, excluding volatile food and energy prices. Core CPI increasing 0.2% last month, the smallest gain since August 2021. On an annual basis, it advanced 4.8%, lower than the market expectations of a 5% increase. Shelter costs, which include rents, made up 70% of the rise in the June CPI as they increased by 0.4%. Airline tickets, they were more than 8% cheaper, posting the biggest drop in nearly a year, while there are also decreases in the price of communication services and household furnishings. Now, in response, US Treasury yields fell. The 10-year was down to 3.86%, while the 2-year fell to below 4.75%. However, inflation remains too high, says Richmond Fed President Thomas Barkin, who questions whether overall demand is slowing enough to get inflation back to the Fed's 2% target, saying, "I'm still looking to be convinced that both demand has settled and that this weakness in demand feeds through to inflation." Well, markets are still pricing in a 25 basis point interest rate hike by the Fed later this month. And the US dollar, it's tumbled to its lowest in more than a year. The index there. The Aussie dollar, though, has surged. It was up around 1.5%. In fact, sitting at close to 67.9 US cents. So plenty to get our heads around at a macro level. Let's also check how that's likely to inform our investment decisions. And to do that, we're joined by John Blank from Zacks Investment Research. John, very good to catch up with you again. Thanks so much for joining us. Interested to get your interpretation then of that latest inflation read, what it means for the US economy, what it means for Fed Reserve policy.
Yeah, Andrew, 3% and 4.8% were the numbers that came out. Obviously, we all heard that, and the 0.2% monthly rise was also a good number. So the entire slate of numbers, however you looked at it, were good numbers, and the market reacted to that. I think really the question about the Fed is not related to these numbers, so people need to understand that. The core PCE rate did not come out today. That is still at 4.6%. And that's why the Fed funds futures for the July meeting did not move at all with this CPI data, because they're going to hike. And Barkin, as you put out just a few minutes ago, talked about this. And I think that's the correct answer. You still have 25 months of lags on average with a Fed rate hiking cycle. We're only 16 months in, so we still haven't seen any real interest rate effects and aren't likely to see them until next spring or even summer. So very unlikely they're going to do anything but hike in July. And now the whole game is being played out on whether they get to 5 3/4, which is what their dot plot said just a short month ago, or not. So this is the new game out of the CPI, Andrew, which is now whether we're going to do 2 hikes of 25 basis points this year or 1. That's the new game.
Yep, very much so, as you say, looking ahead perhaps to that September meeting. So, John, also, of course, we're looking ahead to second quarter earnings season, the big banks leading that off. What are your expectations there?
Big is going to be better. I think, look for Wells Fargo and JP Morgan to do pretty well. Citibank is probably the laggard there in terms of our estimates. But in general, deals have been the weak spot for all these companies. I mean, we're seeing that with Goldman talking about getting a new CEO because there's so little deal making. So any bank that's really stuck in the deal business, the M&A business, is struggling. So this gets to the other related point we're going to learn here is the real turmoil of interest rates is not what it's doing to anything other than what it's doing to the banking system and the financial system. So the real thing we're going to get out of these reads on Friday from these major banks is what the follow-through has been with all of the different businesses these groups roll up. That's the real issue here, because there is a lot of turmoil in the banking system.
John, let's get to your opportunities that you're seeing right now in the equity space. You've picked 3 for us. Let's get straight to it then. The first one being TransDigm Group in the aerospace and defence sector. What are you seeing here?
Yeah, Andrew, this ticker is ticker TDG. It's not a very well-known name, but the stock is unbelievable. It's $890 a share on its way to $975. So what does this company do? It's in commercial and military aircraft systems. So you can think about what's the play with the Ukraine when everybody is sending F-16s, resupplying them with equipment. That's the military side. Then you think about the record highs in the number of planes that are going up, over the 4th of July weekend. That's the commercial business. So they're hitting on all cylinders. This is one of those core precision instrument businesses that drives up when people start buying or fixing planes. So TransDigm Group, got to know about it. It's on a momentum run like there's no other. However, like everything that's like this, it's a 37 forward PE, Andrew. It's very high. It's a momentum stock. I don't necessarily would buy this if I wasn't trading it. I think you got to wait for a pullback on the stock to invest in it.
All right. Okay, that's TransDigm. Let's move then to your second stock, which is Copart. Not familiar with this one at all, but I gather it's provides online auctions.
This is correct. So today we got the news out of the CPI that there's no movement upward in new car prices, and there's downward movement in used car prices. So what do these people do? These are the guys who have like dealer auctions of used vehicles, so big fleets of vehicles. So this is based in Dallas. It's a 40-year-old company. It's been on an incredible run because as the supply chains continue to ramp up the new vehicle production and take those prices down, there's still a lot of demand for used vehicles, and this is their business. So you can see here, incredibly nice chart for the COVID period from 2020 on to 2025. You can see this annual movement. They've just been making a ton of money at this business. And again, very strong price performance, probably all priced in. I've got a 37 PE again, which is way too high for me. But again, when we're looking at a market trading the S&P towards 4,500 with a previous high at 4,800, a stock like this will probably get to its target price of $100 a share from 90. So this is more of a momentum trade. It's an A for momentum our system. That's correct. This is a momentum trade to 100, but I would not be investing in the stock.
Okay, that's Copart. And thirdly, we're going to talk about Lennar. It's in the home building industry. Just before we get to the specific stock itself, John, what are you seeing in property, and I guess more acutely there in home building in the States, demand that's coming through in the current environment?
Andrew, this is a great way to end the show as we get back to what we're talking about with rates, because basically everybody's locked their mortgage rate, their 30-year fixed mortgage rate in the United States below 4%. So if you've locked in a 4% mortgage rate, you're not going to move. You're not going to move and you're not going to buy a house. So what happens is there's low existing home inventory in the U.S. system, and that's keeping prices stable in most areas of countries other than out west. So who steps in to fill the void? The new home builder. This is Lennar. And you can see this stock, you could buy them at $65 a share like a year and a half ago, $128. You would have doubled your money in 15 months. And we had a price target of $140 a share. So again, huge momentum trade on the new home builders. Very hard to see when these rate starts to move into the mortgage space and hit the home builders, because yes, it is 7.5 on the 30-year fixed rate up here, Andrew, but nobody's really putting the finance to work at that level. People are doing buy downs through these new home builders. They're doing it. They're self buy downing, for their own purchase of the home, or they're just simply waiting it out. So still I haven't seen that effect, and that's going to come back to this Lennar trade. Target price 141. Again, super overbought stock, but it's going to probably go higher before it goes lower, Andrew. So another trading vehicle here with ticker LEN.
John, as always, you've given us a bit to think about right there. Thanks so much for joining us from Zacks Investment Research.
Yep, thanks, Andrew.
All right, that is the global view for this Thursday. Just a reminder of where we're likely to be going in just a couple of minutes' time on the local market, at least. As you can see there, healthy gains expected. That's off the back of the last couple of sessions, which has provided something of a recovery, given we did have a sharp sell-off, particularly at the end of last week. So SPI futures are up close to 0.9%. Of course, that did come off the back of global markets rallying overnight, clearly in response to that better than expected inflation read out of the States. All right, stay with us. The open is just around the corner.